Hello guys, welcome to the channel. It's VTM here. So I am going to show you something that will amaze you. I don't know, maybe some of you already know it, maybe some of you don't. I don't know. So let me know in the comments whether you already knew this or what. So I am going to firstly show you my account. I'm not saying I'm a perfect trader, okay, but I'm just saying that I'm going to show you something that if you implement, it will help you a lot in your trading, and it can allow you to trade profitable. It has been helping me a lot ever since I started implementing it, and you can implement this on any time frame, 1 minute time frame, up to the daily, up to the monthly time frame, depending on what you are trading, okay, depending on what you're trading. So you see this weekly high right here. I am going to show you how to anticipate this weekly high forming right here on this level, right there. So this is my history, guys. I'm not a perfect trader, right? I'm not a perfect trader. I see commissions are killing me right there. This is my trading for last week, right? As you can see, I'm not saying I'm perfect at this. I'm not perfect at all, but I am planning on taking this account to 10,000. So if this video maybe gets more than 1,000 views, I am definitely going to share my trading on how I took this account to 10,000. Okay, it's a $1,000 account, as you saw right here. The initial deposit, let me do this. Initial deposit is 1,000, and this has been my trading ever since. So right now I made 300 profit, but minus the 141 for the commissions. So back to what I was saying. I am going to show you a strategy that really works, that I'm going to use to raise this account, right? So let's go back right there to the chart. Don't mind those red losses. They are nothing. Using the strategy, if you are very disciplined, you can do anything with it. See, these candlesticks, right? They are candlesticks. This is the 4-hour time frame, right? This 4-hour time frame represents the weekly range. So if you want to see the period separators, you just go press on your MT5 and then go here, right? Show the period separators, and then that will help you a lot, okay? That will help you a lot. And then the open, high and low, you can also click that. That will help you a lot, because that's where everything is, right? Then let me remove this line. That's the high of the week, right? So now this strategy works if you do not pick bottoms. Just don't pick bottoms on the higher time frame. You are following the higher time frame. Don't pick the bottoms, don't pick tops, don't do that. So now I'm going to go to the weekly time frame. As I have told you, this is the H4 time frame, and these period separators, each period separator represents what? Represents a 1 week. Okay, these candlesticks, they represent every weekly candle, every 1 week weekly candle. And the H1 time frame, I thought that I should share this with you. The H1 time frame represents what? 1 week of trading. Like if you count from here. Let me use my tools right here to actually show you what I'm talking about. So you're going to need this okay, the brush. See, the week started here, right there. That's when the week started and ended here. And if you count, that's Monday, Tuesday, Wednesday, Thursday, Friday. And there's something also important that I should share with you. There's something that's special Well, I guess I'll show it on the next video. I need to expose everything right here right now, right? So now let me show you how to pick the weekly high. Let's go to the weekly time frame, right? So the weekly time frame, we are bearish on this Euro USD. We are bearish, right? We are bearish, and I took a TGIF Friday setup right here from here to here. The first setup were low, so I thought you saw them. I was about to continue going lower, but it was 4 o'clock and the TGIF setup just came in, and I remembered that the TGIF, I thank God it's Friday setup. Like when it's Friday, the weekly candle is going to retrace to the close right there. So you have to know that. You have to know that it's very important. So now we have this, right? Let me show you my Fibonacci, right? These are the levels to my Fibonacci. These are the settings. Okay, right? I want you to backtest this strategy first before using it, but you can use it on any time frame to know where the market is likely to reverse. If the market goes more than 75 or 79% of the Fibonacci retracement, just most of the time it's not worth selling. Okay, 25 and 50%, those are the levels that I like. Okay, so this is my Fibonacci, and these are the settings, right? We've got 0 and 0.5, 1, 0.75, 0.25, 0, 50, 100, 75. Okay, so you can set your Fibonacci like this. Okay, these are the settings that I am using. These are my Fibonacci These are my Fibonacci settings. So what I wanted to show you is how do you capture the lows. Okay, how do you capture the lows and the highs of the week? So we are trading candlestick, whether you like it or not, whether you are trading trend lines or what, you are trading what? Candlesticks. So if you come here to the weekly, right here, right, this is the weekly candle, but right here they're not going to show you well, right? If you put this right here where this candle where this candle opened right there, you will see what this candle just went to to the 50% of this Fibonacci retracement, right? So now let me take my horizontal line and put it right here, since this is the week that I was trading, and starting from this week going forward, that's the one that I was trading. Then I can just put that for you to know where the week is going to end, right? Then when you go to the H4 time frame like this, then see, and then let me reduce my Fibonacci so that it matches with this. The reason why I'm expanding this, because there was a gap, right? There was a gap right here, so the market opened down here, so I had to use the opening price of this candle because there was a gap. And if there's a gap, alright, let me save that for the next video. I'll remember for the next video. So the gap is the reason why I bought during the CPI. You can watch the CPI video before that I upload it on this channel. That's the reason why I bought, because I knew that the market was going to go back and fill that gap. And the reason why I'm putting this right here, because I knew that there was a gap right here, so the market had electronically traded until here, right, over the weekend, and then left a gap. So that's why I used my Fibonacci right there. So let me do this. So now we can go back to the H4. Here we are. So see, the market opened and then exited like it was going up, and then took out these stop losses of the early buyers. If someone knew that this market had to retrace, they went up a little bit, and then they come back and took out everybody, and then waited for the CPI. And then when the CPI came, we went to a premium, right? But note that the market on the weekly time frame and on the daily, we are white, we are bearish, right? We are looking for lower prices. So now right here, this is the 50%. Look at how the candles of the H4 are respecting that. And what's there? That's what are those candles? Those are resistant candles, right? On the 50%. Notice where it is on the 50% of this of the Fibonacci, right? On the 50%. Okay, so I'm not going to talk about those candles, but ICT students know what those candles are, but I'm not going to talk about them. So now see, as the market hit that, it started coming down lower. So tell me, if you knew that the market was going to do this, what were you going to do? Going to sell around here, put your stop loss around there, and then put your take profit where? Put your take profit under these lows, like that. So that's how I'm going to raise my account. That's exactly how I'm going to raise my account. But you use proper risk management, okay? So I'm sure you're going to say this method doesn't work. This method, I'm just coming to you and I'm trying to scam you. No, this method works on any time frame. On any time frame, anywhere you want to use it, right? So let me show you something. If you come here, right, the Fibonacci is the Fibonacci and the bias. You need to have a bias where the market is going to go, right? So I'm going to, okay, let me start with this one. Let's say we have our bias right here. Our bias is what? Is bullish. So we go right here, put our Fibonacci. Where does this candle retrace to? Exactly 25%, to the 25%, which would be 75 if you put it the way around, right? I hope you understand what I'm trying to say there. I hope you understand. So what you will do is you put your horizontal line right there. These candles, you won't know that they're what? They're there. So you'll be testing this in hindsight, right? So this, it's important also to mark the opening price, to know the opening price like this, right? To know where you are at, so that when you move on to the lower time frame, that you don't get lost. You don't get lost when you move to your lower time frames. Okay, so as you can see right here, let me go to the weekly. See, that moved. So go back here and let me reduce my fib too. I'm sorry I'm using a mobile to show you this, but in the future, if this channel gets a lot of views, maybe I can afford to buy a better equipment. I'm showing you this, guys. I'm not saying I have a lot of money and I have made a lot of money with this channel. I'm just showing you this information that if you're a person and you use this, you understand what I'm trying to say, right? Mark that. Let's go to the H4, then go to that, and then scroll a little bit, and here we are. See, here we are right here. So this is the opening price, right? This is the opening price of the previous week. So now we're looking for a retracement under underneath the opening price, which is this. Let's look at this one right here on the horizontal line, and this one represents the week that we are starting on to trade. You see, everything is candlesticks, right? That's why I have these H4 dividers. I wanted to show you that they represent one weekly candle. So imagine if you were buying right under here, under this, and holding on. If you can hold on to trades, I can hold on to trades for long. So I use this mostly on the 1 hour time frame. That's what I use it on. This is my trading strategy, by the way. Okay, this is my trading strategy. So this strategy works perfect if you don't call out what you don't call out tops. So you know where the market is going, where the liquidity is, and all that. That is very important. That is very important. You don't use this strategy only on its own. It's not going to be well. Okay, it's not going to be well. So you can use it to measure the, let me do this. You can use it on this time frame also. You don't need to go to the higher time frame. I just wanted to show you the candles. So this is the high of the week, right there. That's the high of the week, and then this is the low of the week. I'm talking about this week, guys. From, let me see, I'm talking about this week, brush. Yeah, I'm talking about this week. This is the previous week, right? This one. These are vertical lines that represent 1 week candle. Okay, so now after measuring that, see the next candle, what does it do? It retraces to what? 25%. Mostly it will just go to 75% or 50%, or most of the time it goes to 50% and 75%. But by the way, this Fibonacci is supposed to be like this. Okay, it's supposed to be like this. So that's the low. Okay, so most of the time it will just retrace to the 25% or to the 50%, but if it does retrace to the 75%, you have to put your stop loss where? Around the 79% area right there, hoping for, or you can just wait for the market to start going up and then buy on this candle, and then buy on this candle. This is a support right there. You can buy on that, and then it goes up, as you can see. And then let's go to the next week. Let's go to the next week, and let me show you. This is what, take my Fib tool. This is the high, and this is the low, and I'm going to end it on the next and the next right there. Where does it retrace to? The weekly candle. This is the weekly time frame, so you've got to wait to like the whole week for this move to happen, guys. Okay, so right now you say it went to the 50% and then it went up, but it didn't go above the 100%. But as you can see, in the next week we go like this. Come to the next week. This is the high and this is the low. I like measuring the recent high and the recent low. I don't like measuring the oldest high and the oldest lows, right? Like that. And see, what does it do? It retraces to where exactly the 50% right there. And then what does it do? Goes right up, right? Goes right up. So I don't know what you're going to do with this information. Tell me if you didn't understand something so that I can explain. That's what I wanted to show you. Thank you for watching this channel, and subscribe if you like what you saw. And if you got this far, don't forget to hit the like button. I'll catch you in the next video. Thank you for watching.